Outlook call. What's going on, everybody? Welcome to the call. Welcome to the call. Today is July 5th, 2026, and this is our weekly Outlook call. Let me go ahead and we are going to share. I'm going to share my screen. We're going to dive straight into it today, you guys. We're not going to delay, and I don't think that we're going to take too long today, right? But we're going to look to see what opportunities are ahead for us. You guys, this is a session that I've been doing for the past several years now. I've done this weekly Outlook call every day for about 3 years now. Not for you, but for myself. I've realized, like I told you guys on the earlier call, part of this whole thing is us learning what works for us. Like, who are we through this entire process, right? Who are we, and what is going to work for us, right? I recognize what just happened. What are y'all seeing? Y'all are seeing this. Why did it open up a different screen? That's so strange. Let me see. Why is it doing that? That is so weird. Okay, let's see. All right, here we go. Strange, strange, strange things. All right, all right, all right, all right, all right, all right. So I've learned for myself personally that the way that I work best is not to try to process all the information as it's actively happening during live market hours. And that I actually work better when I go ahead and I set a structure and I set a plan for myself from ahead of time. So I've been doing this call for the past 3 years, just doing my weekly outlook call where I'm going to do a sweep of the market overall. I'm going to give gain a perspective of what I believe is possible to take place in this upcoming week. And then from that point in time, I might set some, maybe I'll write it down, maybe I'll set some targets for the week, and we'll run through that fairly quickly, right? So when I start off every week, I start in the same place, right? Every single week, I'm going to do a quick sweep of the Forex factory of the news, right? As I do a review of the news, we'll see Euro, GBP, USD, JPY, USD, CHF, CAD, and so on. You'll see where all of the pairs are compared to where they opened. One of the things that you'll notice is that number one, USD JPY is the biggest mover. USD CAD is in second, right? But then you also see that GBP Euro, the entire market is up. This is a conflict in itself because the Euro USD and the USD CADs, they should not be moving in the same direction. They should be moving opposite of one another. USD should be green and Euro should be red, supposedly, or Euro should be green and USD should be red. They shouldn't both be the same, right? But with that being said, you guys, as I go through and we look at that, that's just the note to take. I'll show you guys another perspective of how to see that. Next thing I'm going to do is just click through the week and see what kind of news is ahead. It doesn't matter if it's Forex futures, options, these are some of the things that will affect the markets. We have PMI news coming at 9 a.m. Tomorrow, Monday, right? For the US dollar, that means the US dollar will be a mover. We've got NZD news on Tuesday, right? Tuesday nighttime, right? So that means that NZD may be setting up for something just as well. USD FOMC meeting minutes. I don't normally trade this. This is in the afternoon session. That means that Wednesday in the morning, it could be like setting up for this. Wednesday might not be a, for me, at least, it might be something to where I observe, or maybe there's opportunity. I'm not going to make a decision at this point in time, right? But I may be saying that I'll watch until it gets to this because I don't know what to expect and I'm not going to be trading FOMC unless I'm already in profits and risk free, right? Unemployment claims on Thursday, and then we have CAD unemployment rates on Friday. It's not the most news heavy week. It's okay. OPEC approves future oil output increase as Hormuz exports start to recover. So the Strait of Hormuz is open. We can say that tensions are decreasing just a little bit. We can actually come here and see in the market that the price of oil is falling dramatically, right? We have seen oil fall well below 100 to the 68 price point. We've got this gap right here that has been filled. all of these things here, they hint towards the war calming down, right? Towards the war settling just a little bit, right? But we don't want to jump the gun because we don't have paperwork yet. We don't have it finalized. They're still in negotiations. We still have outside parties that would, how would I say, that would benefit from an ongoing and continued ongoing tension, in the region. So there's some people who actually want it to continue. So I'm not counting, I'm not, getting over excited yet and expecting that all things are done, right? A few things that I still see here on oil. I actually think there's a potential for us to trade into this 50. For some reason, does this seem like it's highlighted to you? That 50 stand out to me quite a bit. I might be tripping. I might be tripping. It's because of how I had it zoomed. But that 50 right there is like target to me, and we've got these equal lows here and this big pressure. So I'm wondering if price could push even lower before we actually see it maybe pull back. We could actually also see it pull back into here before going lower. But this area here seems to be where I would anticipate oil remaining below $90. So say hello to cheap gas, as the Strait of Hormuz opens and we start to increase production in Venezuela as well as, probably domestically here as well. So we'll start from there. The next thing that I do, you guys, is I'm gonna do a sweep of the actual markets, right? The reason as to why I organized my list, as you guys have seen, I organized my list, right? That was part of the homework for each person to do. Because I'm able to do a quick glance over here and see how the market is moving together. If there's any conflicts on the front end, I can see all of those things here, right? Currently, what it's seeming like is the two USD pairs are positive. The dollar index looks like it may turn positive here now, and we can see that we have red, red, big red on NZD, and GBP has just turned over. Euro is likely to be the next one to turn over to the downside. I already have it marked up. Don't look. We'll get there. Um, but this is what I would anticipate. At the beginning of the week, I like to go through my list from top to bottom, see what I expect to happen. Um, you know, for the week ahead. And this is essentially what I am seeing here in the market as possibilities, right? The dollar index, the USD and the USD CHF are going to trade with it. These pairs will trade against it. So that's why I always start here and then with the JPYs. What we currently see on the dollar index is from a weekly perspective, we see that price has generally been in a bull trend. We've been seeing this kind of rising over here bit by bit. Over the past year, right? Or even from, yeah, the past year from 2025, we saw a massive sell-off of the dollar. We started seeing the dollar assets fall. We saw a sweep of the lows in here, right? We were able to take out these lows, and actually trade into this lower structure right here, right? I see this as like you see how price traded back here. This is actually our one of our last lessons that we just, kind of, not really. Um, but I see this as an order block that price needed to trade back into, right, before anything else could happen, right? We see that's happened. Sideways, sideways, big dip into structure, and we see how price has responded from that, right? We had our sell-off. I don't really know the smart money terms. They have like distribution. That's what it would be called. We got like our distribution. Price sells off into structure. Then we trade sideways, right? And then we can, which is like I think they call the accumulation. And then we see like expansion, where price starts to now move back in the opposite direction, right? Um, we've seen that test. After that test, we're on the weekly time frame. We can drop it down to the daily time frame. We see a big sell-off into here. One of the things that we'll be talking about on our upcoming lesson, right? We have our Well, we just did that, did we? No, we did it in the opposite direction. Ooh, I just thought about something cool. Awesome. I'll teach you guys that just as well. So on the past lesson, we talked about the breach to the downside, where price breaches through. That's lesson three, retests and then falls, right? We're gonna also talk about when price sweeps those lows and it doesn't breach, or it does breach, but it doesn't close below, and then it then closes back into structure, which you'll see is what happened here. We have our lows that are formed, low, equal low, at least relatively equal low. Price then sweeps the lows, meaning that if there were stop losses below here or below here, they were taken out. And then price immediately trades back into structure pretty aggressively. And if you look here, where these buys right here came from, is the exact same level, right? This is not random. This area right here is not random. This is the exact same area here that price had previously traded back to, probably almost to the exact point, right? This is the exact same area. So this is one of the things in trading that causes, newer traders the most frustration, right? This is one of the areas that people see it and they struggle with it mentally because they're like, oh, they chose the direction correctly. But then eventually price ended up sweeping them. They still lost the trade, even though they were right. That's not what the case would be here since this is on the daily time frame. But I just want to show it to you on the daily. And then price ended up going in the direction that they anticipated in the first place, right? From that sweep of liquidity, we can see that price has never come back to this level. What that does for me is that makes this my peak low. Peak low. Price can never come below here and me still be a buyer of this market, right? Price is not going to come below here. We're not looking for another sweep of the lows. This was the sweep already. We're looking for price to give us its true direction, which we now believe to be to the buy side, right? You seen I just drew that straight through. I ain't make it pretty. I ain't make it clean. You know what I'm saying? Yeah, I saw me talk about that on the last session. Maybe I clean it up a little bit, right? And I pull it from here to maybe here, but that's it. I'm satisfied with that because it only takes 2 points to make the trend. 1 point, 2 points, right? The third touches, which we may say that this acts as a third touch to me. You know what I'm saying? Right here. We
It's
may
amazing.
say
These people
that
just walk right in. You don't
the
be paying
uh
attention to where they be
the
going. They just be
third
walking.
touches
Maybe, I mean,
uh validate the move, right? We have touches, 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 price goes through. What does that mean to me? Well, where we've come to now that we have started to create, and that's just to give you the general direction. I could also not focus on back here and start to look at the smaller time frame and say that we've already advanced here. I don't got to focus there, right? I might start to um, I might start to look at it like this and say we got touches, 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 whatever the case may be. We have this big, why did I put this arrow here? Did I just do that? I don't think I just did that, but I'll explain it. Right? We have the candle that creates the breach of the highs. We just spoke about the breaches on lesson three, right? Now we have swept the lows. We've targeted the highs. Previously, these were highs that were tested here, 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 here. These were strong, equal highs. It's like every single time that we came here, we rejected. We could not break beyond this point, right? Guess what? We now find the bullish engulfing candle that takes us through that point, right? That puts us through that point, right? This is what gives us our direction, right? This is now our buyer's territory. We are buyers of the market. If you look here to the right, you'll notice that this is at the $100 mark exactly, right? Key psychological level. We can anticipate a retest of this structure. Price breaks below. So long story short, because it wasn't meant to be a lesson, I'm sorry, guys. What I'm anticipating is that price will now pull back on the dollar into structure, maybe even give us a false breakout of this trend line. we're going to use this area as a potential order block, right? To where price will come back in and we will test in here, potentially, maybe just above it, right? And we'll see price eventually trade away from this structure. That's what I would anticipate to happen, right? I'd use some other additional tools and I would use like my Fibonacci retracements and I would place it at the lows and bring it to the highs. And I would look to see if the levels that I've marked line up with any of my psychological levels that fall between the 50% and the 78.6, is essentially what I would do, right? This is where I would anticipate for price to trade back into, right? If you study like fair value gaps, things like that, which are like, maybe other institutional, I see you, Craig, I'll give you, call on you in just a second. You would say that, in this area here, what we also see is what is considered to be the fair value gap, right? Right between this point and this point. We'll be talking about that on one of our lessons. Oh, I did this example already. This was a fun one. I really enjoyed this. You guys pay attention if you'd like. I don't care if you don't. I mean, I do care, but if you don't pay attention, it's on you. Look, look how cool this is. Watch this. And I'm gonna give it to Craig. Watch this. This was so cool when I saw this the other day. This was like a new discovery. I felt like I just learned something. Look. So fair value gap. Bullish engulfing candle that creates the high. That gives us our new range, right? It takes us to the higher point. The fair value gap is the candle that comes before it and the candle that comes after it. You see, they don't touch. There's no touch here, right? I pull that off to the side. Cool. That's my fair value gap. This is my zone. I want to enter the market when price trades back into this zone potentially, especially since we're on the daily time frame. Look what I did though. I used my fib retracement here and I pulled it from the high to the low because what my objective was to do was to find the 50% of that range, right? I wanted to find the 50% of the range. And I wanted to go ahead and take my line, and then I wanted to drop that line on the chart, right? When I did that, what I recognized was that that line fell perfectly at the $100 psychological level, if I did the measurements well, right? So this is what I see. So what I'm anticipating is that maybe I don't even think that price is going to go here and then just buy. I think it's going to do something sneakier. And I think it's going to do something like this to where it trades below and then trades back above and then finally touches here. And then once it does that, that price is going to give us like a phenomenal entry. And we're going to end up taking these highs and we'll go to 102.5, which will be our next quarter. I think that we're going to see something like this, and it's going to be one of the best opportunities that we see. But and I'll show you why we start there, and I'm gonna go through the rest of the pairs very quickly. Now that we've already done that. But yes, sir, Craig, if you'd like to unmute yourself, you can unmute.
Yes, sir. On your fibs,
Yes, sir.
are they standard or yours custom?
They're custom. Very good question. So the standard fibs is what you'll see is there's a different level here. You'll normally see the 28.3, 23.8, one of the two. I think it's a 23, 28, 3.2. And I don't use that level. That's not one that I use. Because that would be like if the market just did like a pump and then moved. I think that level specifically where it finds more usefulness, even the 38.2 for me, is if the market were to do something like this, right? Pulled in, tested through the 50%, right? Goes to maybe 61.8, or whatever. And then we see price go and buy here and then retest here. That's when I would be willing to use one of those higher levels here, right? But typically, I'm going to be looking for a deeper pullback, right? I want price to pull back deeper. That's going to be like a discount. I'm looking for fair value. Like I want it to be a fair exchange. Imagine we'll be talking about this on one of the next lessons. I'm going to show you guys some real cool stuff. One of my favorites is coming up. But imagine if I was a buyer, you were the seller, right? and I want to buy from you, but I want to haggle a little bit. You feel me? Like I ain't just trying to give you what you're asking for. I think you could come down on your price a little bit. The buyer and the seller, they have to come to a mutual agreement. This is not like big Walmart. You can't go negotiate with Walmart necessarily, right? Maybe I got some hacks, I don't know, but they got to come to a place to where they say, this is my fair value. Okay, it's not as good as I want. I'd like a deeper price, but at least you gave me a bit of a discount. I'll meet you here. You'll meet me there. Even exchange, we shake hands. For me, that level is the 50%. 50% is that fair value range. You can see how the market's already reacted to it and bought. Simple as that. It felt like this could be fair. But if you're willing to come a little bit lower, that would be more my speed, my preference. The levels that I focus on are between the 50%, which is a standard Fibonacci level, and the 78.6, which is also a standard Fibonacci level. The 61.8 is also that standard. The one that you'll see here that is a little bit not standard is my 71%. I've essentially gone to my coordinates, excuse me, or I've gone to my style. The one that was the 21 or 23 point whatever, I deleted it and I changed the number to the 71%. It's just something that I noticed throughout the years. A lot of trades would respond to the 61.8, and that's where it would pivot. But prior to that pivot, what it would do is it would go through and it would break below the 61.8, and then it would leave a wick below, and it would now close back above the 61.8. I could probably find some examples for you, but um, I was
So
able
was
to
it
start.
sweeping the lows?
It was sweeping it, not necessarily like sweeping these lows, but it was going for like a deeper retracement, and then it was like pulling back in, right? And I started noticing that when I used the 71% instead of the 61.8, I was catching entries off of the wicks. My entries was so prime, you feel me? Sometimes you'll miss them though because it will test the 61.8 and move. That's the real level. But it's almost like going to, if I were to go and say use like a line chart, right? And on the line chart, you're not going to notice the wicks and you're not going to notice the candlestick wicks, right? Like look at this. This area right here doesn't exist on a line chart. Watch this. Neither of these points. So you'd be like, bro, what? Neither of those points. So when I started using that 71%, I was noticing that my entries were like in here, these areas that don't exist on the line. That's a whole nother, that's probably good for a lesson. I don't even think I taught that aspect of it, but you asked a good question. So yeah, no, they are not standard fib levels. It's a little bit of my secret sauce. Don't tell nobody. You know what I'm saying? Just use it for yourself. I don't care if you tell anybody. You can spread it to the world, and I hope they win. But yeah, that's a little bit of my sauce right there. You can play with that. But I'm gonna run through it really quickly, you guys. Um, 1 second. All right.
And well, I didn't do the exercise. I've been on family reunion. I don't know if you saw my text to you. That was on family reunion this weekend or
Yes,
this
sir. No,
week.
I didn't get a chance to read it.
Yeah,
So
I just got back today. So I was
yes.
able to tap into the last session.
Okay,
Um,
fantastic.
but my question was, I'm looking at uh, GJ,
Yes, sir.
and I think it pertains to the last session
Okay,
that
perfect.
we had with the break of structure
Yes, sir.
with the
All right, cool.
continuation.
I'll get to GJ in a little bit. Give me like 10 minutes. I'll go through these USDs and
Cool.
then we'll pause on GJ when I get to the JPY section. But keep that question and we'll go over it. I'll make sure I get it answered for you. But yeah, that's kind of how we're seeing that break of structure right here, and we can anticipate a pullback. So with that being said, I would expect to see some of the USD pairs sell, right? This is not being supported by USD CAD. USD CAD does not look like it has any desire to sell. Big bullish engulfing candle, trading kind of sideways above it, what would seem to be a higher. I don't know what this line. I mean, I don't really like this. What time frame did I draw that on? What is that? What is that? Ew, that's ugly. What is that? What are those? Time frame did I do this on? I guess it does touch here and it does touch here. Valid. 2 points. Kinda. Hmm. I don't know. One touch, two touch. Right there here. Da da da. Another touch here. All in here. Very valid. Touch in here. All right, Wale. You just doubted yourself. That thing look ugly to me. I ain't gonna hold you, but it makes sense, I suppose. And it's being respected over here just as well. So we have very well respect. Ooh, we. All right, Wale, you a sniper, boy. Because I ain't even see that. I must have did it in my sleep. I'm just kidding. The scanner called this trade. This is a scanner trade. Ah, this is a scanner trade. If you guys don't have access to the scanner yet, make sure y'all tap in, right? Make sure y'all tap in. I don't know. I don't know if your analysis says that GBP JPY is gonna buy, but that's what this is saying, right? We'll get there. But USD CAD does not look like it's gonna sell.
Yes, sir. That was my analysis that we're looking at a buy.
Okay, fantastic. This does not look like it's gonna sell. This looks like it's gonna buy. This looks like it has to buy, right? Test above, should hit the next quarter level, right? USD CHF. Ooh, wee. See, the only thing is that I wonder if, what if I use this level instead? What if I use this as the most recent swing? That would pull me straight to the 61.8. Huh. Huh. Maybe I'm looking at this incorrectly. Maybe this is being used as the most recent swing. And this is now trading perfectly off of our 61.8, 70%. I don't like this gap here, but then maybe this is the block that we're reacting to. Right off of the 70% through the 61.8. Look how that, oh, wait, look how that 71% is used. Now we're back into structure. Hmm, hmm, hmm. This might not hit. We might not pull back like that, guys. That means that we'd be taking a weekly trend. I think we gotta pull back. Ah, this gap right here. Conflict. Conflict in my head. I think I think we got to pull back here, but I don't want to say that the market has to do anything because the market doesn't have to do anything. And I try not to use that language. I would like for a test of this 100. That's what makes the most sense to me. We might pull back to here. Maybe we see the buys first to here, mitigate this little imbalance. You can see that this imbalance doesn't create any significant lower lows. That's what catches people a lot of the time. We could just test here and go higher, right? But it also could turn over. So we're going to be cautious of that. This does not look like a sell to me. This is a major imbalance, but the fact that we took this and now we're trading sideways, I would actually start to look for this as like an equal measured move to where this is our first A leg, and then this is like our B, which is just like some consolidation. Maybe we pull back into structure, and then maybe we end up getting a duplicate move, something like this that actually pushes us higher. Possibly, maybe not. I don't know, right? But I would certainly expect for that's a lot of pips though. That's a big move. I don't know if we're gonna get a move like that. But that does just come back to the highs. You know what'd be crazy is if I put a line right here and that equal measure move brought us it it doesn't. Okay, we're not gonna think about that. Sorry guys, I'm in my head right now. I'm kind of tripping a little bit. We got to see how markets respond to here. This area right here is important because it could sell, but this could be a real sell for real, right? Right in this area here. So you guys, I'm gonna let you know I'm not 100% on what this week is gonna hold. My instinct is telling me that we're gonna test this quarter, we're gonna sweep these highs, but then what happens after that, I'm not sure. USD CHF, I thought that we could trade back into here. We are looking to pull back that way. It's also possible that we turn over though completely. There's imbalances up here that I would expect or think about price trading back to, but it is also possible that we don't just test here and it trades through. So what we want to see is we want to see how does USD CHF respond to this structure right here. Scanner is currently looking for an opportunity, waiting for a retrace into entry zone on a bullish SPY setup ready. It's calling the buys on USD CHF. And we see that we got the moving averages that are crossing. We'll talk a little bit about moving averages. I don't use too much, but I use some of those. We'll keep them moving. I just don't know what's going on right now because price could turn over and we could see another. You see, we got one leg down, price pulls back, one leg down, price pulls back. We can get one leg down, but it's just leaving all of these gaps and imbalances. So what that means for us is that it doesn't matter what happens, right? If we're leaving all these gaps and imbalances, or imbalance here, we might have a duplicate move, right? Let's go ahead and say that this ends up equaling this, which ends up equaling this. And then from here, we end up being able to get into a position here that ends up closing all of these imbalances because they all have to get closed. You know what I'm saying? Like price will eventually trade back to fix this nastiness, but we just don't know when. So we got to be patient. We might have to see what kind of news is about to come that's going to give us our clarity because we're not clear. I'm not clear. FOMC. That's why, bro. PMI tomorrow as well. We'll be up for PMI. We'll be up for PMI. That might give us our go ahead. NZD, I'm looking for the sell side, maybe a little deeper pullback. So it's making sense. As I'm going through it, you guys can start to see how I'm building a story in my head, right? I'm trying to make sense of it. You guys can see like my real conflict. I hope you see it and you understand it's real. And when you find yourself in conflict, this is some of the mental side of it, right? How do you respond in that? The reason why I have this list, you see how everything is now aligned, though. All of the ones that should be selling, like I told you, these should be trading against each other, right? Or these should be negative, and these should be negative, and these should be positive and positive, right? Now it's starting to do what it's supposed to do. I could see that clearly through my list. That means Nas is probably going to sell, right? We'll get there. Anyways, um, NZD, we go ahead and we see a pullback is possible, probably to structure here. And then we might look for price to come and break these lows and trade to the 55 or even to the 52.5. We're looking for the next quarter level. That's why you guys have to make sure that you understand the quarters because it's like foundational. We would be trading from the 57.5 to the 52.5, which is a whole 500 pips. You drop a 10-cent lot on that, that's $500. You could do that with a $300, $400, $500 account, and you can see 100% returns, in a matter of, 2, 3 weeks on one trade, right? Doing it just like that, right? But that's what I'm anticipating. Pull back to here, price sells from that, trade to the next quarter. Euro USD, same exact thing. We've already breached the lows. We have the lows. We've breached the lows. This is the last lesson. Who said that? Craig. This is a good one to look at as if you want to study on our last lesson, Euro USD. You could also even see that we have what is like a left shoulder, right? And a head and a right shoulder, right? Then a neckline here that falls right at the halfway point, that 1.150. Then we go to the daily time frame. This is how we do a top-down analysis, or we go higher time frame down. We have the daily time frame where this area is breached. These are the previous lows, previous lows, previous lows, previous low. Market breaches that previous low. We expect for price to pull back into structure. We may look to see what the fibs are or where price can come to, right? Come back as far as this 78.6, which happens to be right in the middle of that fair value gap. If I were to use this and just measure the gap in itself, right, I might go ahead and say that the 50% of this gap, if this is not a weird, I hope, I be trying to I literally through my courses, as I've been doing this since I got people that are experienced, I be trying to find something that I can give that's going to make them be like, I never use it like that. This is just me messing around, type of stuff. What was I even doing? Okay, put that line at the 50%, and then I'm going to go back. I don't know. I just be experimenting. I'm playing with stuff right now. I was trying to see if I could figure out some higher level higher level stuff. You know what I'm saying? You see where I put that line at is actually the 78.6 of the bigger move just as well. So one level fell on top of another. 50% of the fair value gap is the 78.6 of the overall move. So I'm not sure what's going to happen here either. I would not take a trade at 88 pips, right? But I do expect that price is going to pull back. You know, we might want to anchor to the highs and maybe we wait for price to trade back to that 78.6, which is the fair value gap there on the euro, which would be a buy into here and then a sell from that point in time. If that does happen on the euro, we would expect for the dollar to sell to buy. Yes. I'm sorry, guys. I'm sorry. I'm a little childish. I got a little daughter, so I'll be expressive. You feel me? But I'm trying to figure out how I can make it make sense in my head, right? I got to resolve the conflict because I have conflict. Do I enter the market at the beginning of the week or do I enter like how do I do it when the conflict resolves? If this gives me a piece of the puzzle, I'll tell you for sure this is not, I mean, some people may enter right off of here, right? You may enter right off of here just as well. That might be somebody's trade. I don't know if it's my trade. This is like a test of the lows, right? It meets my requirement. It comes right back to the 50%. Remember, I told you that high to lows, I'm not entering if the market doesn't come back to at least the 50%. That's fair for me. We've done that. Now we're below the 38.2. This is the exact example I just gave you guys of something that I'm like, you know, that's how I would use it, right? It met that, but I just believe that we could go more. And with the news that we have, if the news comes out tomorrow and the news immediately spikes into into structure, guess what? I'll be ready to take sells tomorrow and I might be holding it all week, even into FOMC, right? That's how we trade it. We get the entries, news, boom, spikes, I'm in, okay. By the time FOMC comes, we're already back even to where the market opened. This is where market opened. If FOMC comes here, I'm going to be grateful because if it spikes, it might spike up here and then we'll be never in drawdown. I like that. You know what I'm saying? GBP USD, I don't really know what to expect here yet, so I'm not going to spend too much time here. Um, this actually looks like we could see, you could see that I took an attempt. I don't know what this was down here, but this actually looks like it could be set up right now, maybe. However, eh, too big for me. Sorry to drag my words like that. I don't know why I just did that. I hate that. It's too big for me. Golly. Jeez Louise. Sorry, guys. Anyways, NASDAQ, this is what I'm seeing on the NAS. We have a higher low right here, right? So we'll pay attention to that higher low here. But then we're also making lower highs here. Market's not ready yet, you guys. This is where you're patient. We're rejecting off of the 71 point, um, well, the 71%, seeing that rejection here, this big sell-off would bring people into the market. This is what I think could happen. Maybe we might see a pullback into here and then maybe buys here. I got a couple of questions this week. If anybody has the answers to these questions this week, I would be excited to hear your perspective. We have the new Texas Stock Exchange in Dallas that opens this week, and trading is beginning. And then we also have the Trump accounts that have started being funded as of yesterday, right? I want to understand how that is going to affect the broader stock exchange, right? But I might expect to see price pull back here and then see price go and sweep these highs. Um, and then I'm going to go ahead and jump over to the JPYs. JPYs, big sell off the rip. That means that all of the JPYs should be turning green. All of them should go green, right? This sell coming off of structure here, off of structure here, off of structure here, off of structure here, we are seeing a big sell-off into our trading range. What we want to go ahead and see now is that if price is going to break below maybe about here, you know, but really below here, right? If we do something like this, which is exactly the trade that's already kind of set up here, right? We would anticipate that price would continue to fall from there. I see the chat. I'll get with you. Let's see what we're talking about, right? You're not seeing my screen? Drop.
I'm sorry. Maybe it's me. I'm at the airport. Maybe I had a delay or something, but I don't see it. Okay.
Okay. Okay. I'm like, what? How long have I been going without you being able to see my screen? Anyways, all right, we'll keep it going. It'll be on the recording, worst case scenario. Travel safely. We're expecting to see this sell off here and then a break below this downtrend as we're seeing right now, and price should continue. That should give us big buy side on the whole market. AUD, JPY, we're seeing is buying. We want to see how we're going to react to this level here. Is this a pullback or a reversal, right? That's the question. Is it a pullback or a reversal, right? We didn't quite breach this previous low, right? Came in sideways. We could go here and keep on going depending on how things move. We've got bigger space for bigger pullbacks on CAD JPY. CAD's been staying low because it's attached to oil, but it's a potential that we see price trade back into the 115, which would put this much higher. And we probably wouldn't see this happen, but we'd probably see a move more so like this, right? To where we go and we sweep these highs. I think that this is what we'd be looking for more so on AUD JPY. Ooh, golly. Okay. This is going to lead the whole market. GBP JPY, sure, for sure. I don't like to say for sure, but this is highly probable to sweep this high and trade to the next quarter level. We can take the buys off of the 215, right? And we would be looking to take that to the 217.5, which would be about 150 pips. We want to see which candle started the move. I would probably be looking at this one right here, even where these wicks came off of, and I wouldn't really want to have a bigger stop loss than about here, about 45 pips is what I would essentially be looking at on that GBP JPY from the entry here, right? With my expectation that we should be trading to the 2217.5. With that being said, this represents a 1 to 5.6 risk to reward ratio, right? That, however, has already occurred, right? So if you were to just enter here with the same stop loss, now you've reduced it to a 1 to 1. But we now can expect that price should continue from there. So what do we want to do? We want to find the opportunity for us to dial down, to scale it down, and to find a better opportunity, right? One that may still be present, right? In that, we have maybe structure here. You can see that the market seems like it closed lower or it opened, it opened low, right? And then is now trading above here, right? I don't know if price is actually going to pull back. This might have moved too much already. We might see another pullback into here, and then what we might anticipate is we might anticipate that price. I don't really like it, to be honest. I feel like I missed my chance on this, if I'm being real with you. Um,
I entered at the quarter.
hey, you're a champion, and hold that. You take the rest of the thing because I feel like we going to 2017.5. See, that's where I would have liked to have entered at. If I would have entered, look at that, off of the quarter, then runner. We got that.
Yeah,
But
yeah, then I
now,
gotta take it to the next quarter.
yes, sir. Very good. Very, very good. I like it. I like it. I like it. What kind of question did you have in regard to GBP JPY, or did I answer that for? I mean, you could still ask
No,
it so
you
that.
asked because I was looking at it because you was had went over about the entry levels, and I had kind of marked it up, and I think I sent it to you where I had my
Okay.
quarter level entry.
Okay. Let me see. I don't know if I got a chance to see your message to. Can't even find it. I gotta look it up in my. I'll look at it after this.
Yeah, so I'm up
After this
like
session.
35 pips now. So
That's what I'm talking about. Congratulations on that, right? And we're seeing price should continue to hold. I think that we should get an easy push to that 2017. I think this should lead the whole thing, and that your next targets will probably be 2016.5. That is a whole nother 80 pips away. Maybe you can take profit here. I don't know if you've taken anything yet, but maybe you target this high and then the following, and you see how that runs. I would have to see price take this high, and then maybe I can get in on a pullback off of structure here, right? Because this would be a potential pullback zone for me. But if it pulls back there now, I don't know. I need to see it clear the
Yeah,
highs
I
and
have
then
a
pull
final
back.
target of 27.5. So, but I have to go back. I'm putting my other quarters in
Yup,
and see if
yup,
it those
yup.
targets.
Yes, sir. 217.5 sounds like a play to me. Phenomenal job and great job applying what we've talked about here so far. With that being said, Euro JPY, we already saw profit hit on that one. We called that trade previously. After that, we saw a correction, full correction back into structure. A couple things that I'll notice for you guys here. Uh, Even though this was a dramatic sell side position, what you'll notice is that we did not create a lower low below here, right? This comes into the concepts of like internal versus external ranges, right? These are technically lows in the market, right? These are lows in the market, right? These are lows in the market. However, all of these lows may be internal lows, right? With this representing the external range that would bring us from one point to the next, right? This is the range that we would want to see price break in order to go external and to continue going lower to like the 182.5. But given that we haven't done that, and now what we're seeing is that we're close to the next quarter, the 184.5. I would say that the scanner would probably pick up a Euro JPY. Yeah, because it's going to say that we are in proximity to our closest quarter here. And it's now saying that we have 5 out of 7 conditions confirmed near your quarter level, watching for a counter trend sweep to confirm, with the macro also supporting us, saying that we have a bearish yen basket, right? Which is exactly what we're seeing. The scanner has picked up the bearish yen basket. Let's go. Such a beautiful thing. Confirmed near quarter level, waiting for the pullback. So we're waiting for a pullback, right? We want to see price trade lower back, probably maybe into here. And then once we get a sweep, ooh, this might be it. If it calls a sweep at like 184.45, like something in here, oh my goodness, we're all gonna be rich. I promise you, because I'm gonna give you guys this for free if you pass the boot camp, right? The whole thing, not the free version. I'm gonna give you the elite version, right? If we get something like this, oh my goodness. Oh my goodness. Guys, I'll be looking at this. This is beautiful, actually. This is setting up quite nicely. Very low risk, 1 to 5. What we would want to see is probably price break above here. Euro JPY might be the trade of the week. This might be the trade of the week. That's all you need. You just need one. I only need one. If I could find one, this might be it. I like this a lot, you guys. This is my favorite. This is my favorite setup that I've seen so far. And the scanner called it, bro. Ah, that's so exciting. Oh my gosh. Whew, it's finalized, yo. Ah, I could scream right now. I'm gonna scream when I get off this call. Who, who, yo, trying to get a machine to think like you? Huh, it's not easy, bruh. It's not easy, yo. This is what I'm anticipating. Price trades into structure here. A higher push. Price sells. Sweeps this low right here. And then we take the buys off of that. Big boy trade back to the highs. Realistically, 1 to 15. This is it, you guys. This is going to be the trade of the week. Y'all want to see something funny? Y'all want to see what happens when I put this line on the chart at 187.5? And then boop, 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 boop. Look at that. Look at that high. This might get big, guys. This could be bigger. But what would support this being bigger is if the war deals did not go well and people were not comfortable with the yen. I hope it goes well because I thought this was going to sell. But what if we sweep this high and we go to like 190 and price just continues to buy? Possible here. Possible here. Let's wrap it up though. Ooh. Ooh. One of these pairs is not the same. One of these things is not the same. Do you notice it? Can you see it based on our list and our organization? Every single JPY is trading opposite of the yen basket. They're all green. Even the Australian dollar, which shares a lot of their economy, like they're connected with the NZD. But one of these pairs is not the same. It's the NZD JPY because this right here, the clean test of this structure, you could see it easy too. Look at this. Look at the opposites of here. Crazy, yo. You know what that means? It means that it's not because of the JPY. It's because of the NZD. So you know what that means? That means that even NZD USD should be highly bearish. Highly bearish. NZD USD. This is the USD trade of the week. This is the trade. Y'all want to see something else? You know what that means for one of my favorites? Calling this trade right now. Mm-hmm. One second, guys. Watch this. Watch. Mm-hmm. This is going to run. It's ready now. Oh, it's ready to go. This is it, you guys. What a week this is about to be. Hmm. Did I lose that? Where did it go? That's a whole 100 pips. That's a lot. I can't do that. Let me see. Gotta cut that in half. Sorry guys. I'm gonna go ahead and drop this. I think I'm about wrapped up for the call today, but this is gonna be my It's a couple of trades of the week. Something's going on. There's a shift happening. Something's about to happen. Yep. Something's about to happen. Something's about to happen. I'm very confident in this. Very much so. Oh, trying to get my wrist to reward. That's why it's taking me so long. Oh, I gotta enter this though. Uh-huh. All right, ready. Ready. If you guys got your accounts, I'm gonna enter this one. That's the best that I could do. 20, 60, 70, 70 pips. Can't afford a pullback. Don't know if it's gonna come. About a full. I ain't never take a trade like that. We gotta send this one. That's bigger than my normal risk to reward. But yeah, you guys, that's what I'm rocking with. That is the weekly outlook call. I believe that that is everything that. Huh? There we go. Bomb. Sent. Ain't no going back. Gotta enter on my account. Ain't no going back. Bigger stop loss than normal. Manage your risk accordingly. I like this a lot. I be smacking Euro NZD is one of my best, like highest performing. I be smacking this market. Sorry guys, being a weirdo over here. That's what I'd be looking for. That's what I'd be looking for. Clean enough. Download. Full send. All right, you guys. With that being said, we're gonna wrap up the call there. Won't hold you guys any longer. Thank you guys for your participation. Hope you guys have an amazing rest of your week. If you guys see it, feel free to drop your ideas, trade analysis in the chat. We'll go over it. We'll look at these things throughout the week. You know what I'm saying? Hope you guys have a great rest of your week. I'll catch up with you all soon. Peace. Oh, I think I seen a hand raise.